Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Wednesday, Hump Day, halfway through the week, folks. January 26th. Big news today. So let's take a look at the economic news releases. We'll start off here with the new home sales. Popped up pretty good, so 329,000. Stock market's liking it, so that's good news. They're estimating about 30,000 less, and it jumped up from 280 from back in November, or back in November. So those are all good news here. The big news today, of course, is the Fed statement. They had their two-day meeting and 11:15 West Coast time here, Pacific Standard Time. They'll be providing their release, and really, the investors, everybody, really going to be looking in on this, see how this is going to be playing out, what the wording is, because they're looking to see is inflation, is it flatlining, is it still concerned going downwards, that's going to be the key item they're going to be looking at. Also, they're going to look at potential if there's going to be any growth forecast for the year. So those are some items that they're looking at, and so when you hear that or see it later this afternoon or this morning or afternoon, wherever you are, definitely pay attention to those key words that they're going to be looking, see if there's any changes in those words. Right now, the stock market's up a little bit, but still kind of anticipating it's not up a lot. Just kind of waiting for the Fed statement, as the bond market is, the same thing. The World Economic Forum was having their annual event, and Nouriel Roubini, he was kind of dubbed Mr. Doom for his forecast earlier in the decade for what was going on here. And basically, he's kind of cautioning everybody about the Eurozone debt crisis, that it can really put a hamper, obviously, on the economic growth that we could potentially see, because this is still a major concern. And even with the bailouts, it looks like there still could be some more issues with those same countries, as with their austerity measures, that they could still be exceeding their levels, still could be going upwards rather than coming down. So something to be cautious of. The State of the Union address yesterday didn't seem to really be affecting markets this morning, so that doesn't seem to be playing major. The markets are really kind of looking more at what the Fed's going to have to say later today. So the bond market, it's actually starting off way low today. It dropped right now we're about 44 basis points from where we left off yesterday. Yesterday, as you see, we had a nice little, it was way down here and it popped right back up. So we had a nice little rally, brought us closer to the 10-day moving average. So anytime you kind of see us moving too far from 10-day moving average, it's kind of amazing. It kind of works itself right backwards, like a magnet. It just pulls it right back up. So you don't usually see it stray too far for too long off the 10-day moving average. Right now, of course, we're kind of trying the bottom line, but once the Fed releases their statement, we could see a quick change. Could go one way or the other, depending on what the Fed has to say. Right now, mortgage rates are worse than what they were yesterday, as we are about 44 basis points lower. So, but again, that could change later today once the Fed makes their statement. So, and as you can kind of see, we're also seem to be going a sideways statement here. We really need to kind of break this trend, and we need to do it in a sharp way. We can't keep bouncing out the 98.50 mark here, because that's going to start to weaken here pretty soon, and it could easily worsen as we go along. So, all right, folks, have a great day.